Great. So I want us to look at April 2024, question number 2b, which reads, Dynamo Limited manufactures bicycles. The company uses a job costing to allocate costs to individual products. The company products provided to its customers. The company has 3 product departments, that is T, Q, and M. The company has commenced the preparation of its fixed production overhead costs budget for the next financial year and has identified the following costs. So these are the overheads, the fixed production overheads. Now remember, the production overheads will be forming part of product cost if we use the method called absorption costing. So we have the overheads here in millions, and of course we have the allocation basis. In most cases, the examiner will not give you the specific allocation basis. You'll have to identify them from a given list. You'll have to identify, if I'm going to do with depreciation of plant and machinery, what am I going to use as the allocation basis? And of course, we've been given that here. Then the costs are apportioned to the individual product or production departments, T, Q, and M, as follows. So we have production departments, direct labor hours, direct wages in millions, number of employees, floor area in square meters, net book value of equipment in millions. So required, the primary allocation of production overheads cost to the 3 departments. Number 2, calculate the overhead absorption rate for each department based on direct labor hours. And of course, we have Roman 3, which we'll be able to handle once we have the solution to Roman 1 and Roman 2. So that's what you want to handle. I believe you have the question with you now. You've taken a screenshot, and I'm going to share my board for us to be able to do it together. For us to be able to do it together. The question is from topic number 4. And of course, we are doing April 2024, question number 2b. We are dealing with allocation or reapportionment of overhead. So under allocation of overheads, we'll be able to add number 1, direct allocation. We'll be doing what we call primary allocation. And of course, the last one will be secondary allocation. Which we normally call reapportionment of overheads. So the direct allocation here, we have laptop purchased to be used in the accounts department, right? We have laptop purchased to be used in the accounts department. That will be allocated directly. We don't need to apportion. We have plant and machinery purchased for the production of the items in maybe production department T. So this plant and machinery will be depreciating, right? So depreciation expense for the plant and machinery will directly go to the production department, right? We don't need to allocate. That will be, we don't need to do primary allocation. That will be done under direct allocation. You take the entire amount to that particular department. But now we have rent and rates. We have rent and rates. So rent and rates here, remember, we have warehouse, we have showroom, we have showrooms for this particular company, which is used by the sales department or to store the goods here after manufacturing. We have the consumables, right? Consumables here. Let's say we have items being used by staff or employees to do the production of goods, to their daily activities within the company. So these consumables will be stored maybe in a given room, and that has to be paid for in the name of rent and rates or lease rentals. Then we have administrative block, right? We have maybe accounts office. We have store where raw material are stored before they are used. The company has to pay rent for all these spaces. When they're going to pay for rent, they pay rent, let's say, as a lump sum figure. So we have to do what we call primary allocation for this rent. So we are talking about category of departments. Here we have production departments, right? Then we have service department. So we've been able to see that rent and rates will be applicable or will be incurred both in production and service departments. Laptop here, it is used for accounts that will be under service departments. Plant and machinery, the depreciation for this will be incurred under production departments. We are talking about depreciation that relates directly to plant and machinery will be under production department. But now, if you have cumulative figure as the depreciation for the entire year for this particular company, will required to specify which portion will be going to the production department and which portion will be taken to the service departments. Let's say production department here, we don't have one department. We have department T, Q, M, we have X, Y, right? So those are 5 departments within this particular company. We are talking about insurance expenses, right? It has to be apportioned to these departments. Now, the insurance expense here, the rate and rates that applies across the company will be distributed to all these departments by use of what we call primary allocation. Now, at the end of the day, once all these costs have been apportioned under primary allocation, remember, let's say you want to get the output. You want to get cost per unit of each output. And for us to get the total cost, we must get how much did we incur in the production department, how many units did we manage to produce from this department. What will happen to the service departments? They don't produce anything, right? They don't produce anything. So we'll have to ensure that for us to get the total cost per unit of output, we cannot leave the cost incurred in the service department by not including them to the production department cost. Remember, they were only incurred to generate the final product. So what are we going to do? We will have to take the cost incurred in the service departments and distribute them to the production department where we are getting the output or the final product. That process of transferring the cost incurred in the service departments to the production departments is what we call secondary allocation or reapportionment of overheads. So now, for today's session, we are going to handle primary allocation. But of course, if you now join our classes for the August exams, you'll be able to get to understand how we are dealing with secondary or reapportionment of overheads. So under secondary or reapportionment of overheads, we normally have 2 methods. Method number 1, we have what we call continuous allotment method. We have what we call continuous allotment method. And method number 2, we call it algebraic or simultaneous method. So when we get to class, when you get to our paid management accounting class, you'll be able to see how we are going to handle the secondary parts. The primary part, that's what you're going to tackle today in this particular session. So are we together up to that point? With that brief background, are we okay? Are we together up to that point? Are we together up to that point? Are we together up to that point? Confirm if you are together. Now, somebody is already interested and wants to join the classes. They are not yet in class, but they want to join this particular classes for the entire semester. It's very simple. Just do your payment to this pay bill. Just do your payment to this pay bill. We are talking about management, accounting, so just write MA as the account name. Amount here has been divided into 3 categories. Amount here has been divided into 3 categories. If you are doing this particular paper for the first time, you'll be required to pay. So we are talking about first attempt. You'll be required to pay 4,800 for the entire semester. If you are retaking this paper, and of course you are a RCM student, right? Will be charged 3,800. If you are taking this paper and it's your first time to do your studies at RCM, will be charged 4,000 for this particular paper for the entire semester. Now, this 4,800, this 3,800 or 4,000 will give you right to access number 1, all classes, that is live classes, then videos for all the classes that you missed, you'll be able to access notes, free notes. You'll be able to access free notes from our learning platform. So all these videos and notes will be accessed through this particular platform called LMS. You will not be charged additional amount. Once you pay 4,800 or 3,800 or 4,000, depending on where you fall, you'll be able to access all this without any additional charge. Now, if you're not able to go through the the soft copy notes here, and of course you want to get some revision kits. You want to get some revision kit for the same unit. Again, they are in 2 different forms, right? So we have hard copy of this and also soft copy of this particular revision kit. The hard copy goes for 1,000 and it will be delivered to wherever you are. You only need to pay 1,000 and you get this hard copy to where you are. Soft copy, you will be charged 800. Soft copy, you'll be charged 800 and then you are given right to access it. The expiry date of accessing the soft copy, it has to expire. That's the only disadvantage of soft copy. It will expire on 23rd of August 2024. Once you're done with the exams, this soft copy will automatically disappear. So if you want to retain the hard copy, just pay 1,000. It gets delivered to wherever you are. If you don't want hard copy, get soft copy. And of course, it will expire on this particular date. The content of these books are actually the same. There's no difference between soft copy and hard copy in terms of content. You'll be able to access everything within in this hard copy or soft copy book. So that's also what you need to put in place before we get to handle the question. So your hard copy must be in this particular form. If it is not in this form, then just know it is not from RCM. Your hard copy for the same must be in this particular form. So ensure you have hard copy of this unit or a soft copy for this unit, and of course join the live classes. By having those materials, you'll be able to attempt this paper once and proceed to the next level. So that's what we have there. For any inquiry, just reach out to these 2 people here. For any inquiry, just reach out to these people here. They'll be able to assist you. They'll give you guidance now to access all this, or now to access all these materials that we just talked about. So I believe that illustration is enough. And of course, we have to move with speed and look at that April sitting, April 2024 question number 2b. So the first part, they want us to do what we call, they want us to calculate required the primary allocation of production overhead costs to the three departments. So here we are dealing with department T, we are dealing with Q, we are dealing with Q, and of course we are dealing with department M. So in this particular question, all these departments are production departments. These are production departments. Good. Now, do we have any direct allocation? The overheads that are listed there, is there any direct allocation? Do we have any direct allocation? Do we have any direct allocation for these departments here? Do we have direct allocation to these departments? Do we have direct allocation to these departments? Do we have direct allocation to these departments? So this is what we are going to draw, or this is the table we are going to use for us to be able to handle this particular question. Now, if you look at the overheads that are given there, just need to list them, all of them down there. So the first overhead given in that question, we have depreciation, right? So we have depreciation. Depreciation, the figures are in millions, so we can also decide to put everything in millions. Let's retain that or maintain that. So we have the first overhead item, depreciation. Depreciation. So if you look at the raw data that has been given to us, what is the allocation basis of depreciation expense? What is the allocation basis of depreciation expense in the question? The first table, we have overhead cost, we have amount, and then the basis of apportionment. So what are we going to use to apportion depreciation here? What are we going to use to apportion depreciation? Somebody? We have it there. I just want you to mention it. What are we going to use to apportion this depreciation? The net book value of equipment. The net book value of equipment. So the three departments has got equipment. The company has combined the depreciation expense for the entire organization. So you want to see what portion are we going to take to the T department, Q and M. So that's what we come and do here. Our basis here is the net book value of equipment. Net book value of equipment. Now, look at the second table. We are told that the costs are apportioned to the individual production departments as follows. Look at the net book value of the equipment, the last row. The net book value has been given in millions, right? So we have two ways of dealing with this. We can use ratios or use what we call overhead absorption rate method. We can use ratios method or use the overhead absorption rate method. So I want us to use the ratio method for you to be able to understand what is going on here. So the net book value of the equipment has been given in millions. We have T having 80, Q 50, and of course M having 90, which means in ratio 4, you'll be having 80 million to 50 million to 90 million. So let's look for a common number that will divide all these numbers. So we of course just eliminate this zero. So we'll be having the ratio of 8 is to 5 is to 9. 8 is to 5 is to is to 9. So I will come here and indicate the ratio. 8 is to 5 is to 9. That is the ratio which we are having under depreciation. Then the next thing you're supposed to do, what is the total overhead which you want to distribute to the 3 departments? Go to our first table. We have overheads and the amount. The overhead under depreciation is 660 million. So this is what you want to distribute to the 3 departments based on this ratio. The simplest procedure once you have the ratio is this. Come and look at the summation of these ratios. We are talking about department T, Q, and M, right? So what is the summation of this ratio? That is 8 plus 5 plus 9. What are we getting? 8 plus 5 plus 9. 8 plus 5 plus 9. What are we getting? We are getting 22, right? So it means T is having 8 over the total. Q is having 5 over the total. M is having 9 over the total. So that will be used to distribute 660, the overhead. It will be used to distribute the 660, which is the total depreciation expense. So how much are we taking to the T department as a depreciation expense? When you take 8 divided by 22, multiply by 660. What are we taking to the T department? How much are we taking to T? 240. Okay. How about Q? How much are we taking to the Q department? That is 5 divided by 22 by 660. We are taking 150. How much are we taking to M department? How much are we taking to M department? 270. Now, the overhead we are distributing is 660. You cannot tell us that whatever you've shared to each department will be more than that 660. If it is more than that, just know something is wrong somewhere. So that's what we'll be bringing here. We have 240, we have 150, and we have 270. By doing that, you already have your 1 mark, just like that. Let's go to the next item. We are talking about indirect labor. Indirect labor here, what is the allocation basis? It is going to be distributed based on direct labor hours, based on direct labor hours. So let's see. The indirect labor is equal to 900 million. The allocation basis is direct labor hours. So let's look at our question. The production department has got 5,000 labor hours. 5,000 labor hours. Q has got 3,000 labor hours. And M has got 2,000 labor hours. So let's come up with a ratio. Let's come up with a ratio. 5,000 to 3,000 to 2,000. What will be our ratio there? What will be our ratio? Somebody? Somebody to help us get that ratio. Very simple. If you have a common figure, just eliminate the 3 zeros. We'll be having 5 is to 3 is to 2. That's the ratio, right? Good. Having done that, so come down here and give us the total amount to be distributed, 900 million. So once you have that, add this. When you add everything, we'll be getting 10, right? So it means T, so we have 5, we have told the labor hours. That is the basis. We have the ratio of 5 is to 3 is to 2. So let's come here and get it. T will be taking 5 over total by what they're supposed to share. Q will be taking 3 over total by what is to be shared, and of course M is taking 2 over total by what they are supposed to share. So what is the share taken by T? What is the portion taken by T department? What portion are you going to take to the T department here? 450, okay. About Q? About Q? Q department, 270. That is 3 divided by 10 multiplied by 900. Then the last one, M department, 2 divided by 10 multiplied by 900, 180. Good, so that's what you are required to do under overhead number 2. Number 3, we have repairs and maintenance. Repairs and maintenance. Repairs and maintenance is supposed to be distributed based on 30% to T, 50, and 20, right? So that is of the total cost, right? So it's based on, you can put percentage of total repair cost, right? They are telling us it's supposed to be done with the ratio, with the proportion of 30, 50, 20, right? So that is 3 to 5 to 2, 3 to 5 to 2. So we want to apportion that based on the percentage that has been given there. So if you look at our maintenance costs, repair and maintenance costs, we have 110 million. Supposed to be distributed based on percentage. So we have 30% of 110 going to T. Q, we have 50% going to Q. And of course, M, we have 20% going to that department. So what are we getting? What are we getting? For the first department, what are we getting here? Let's start with the T. 30% of 110, Lingapi? 33. Thank you. So we have 33 here. 50% of 110. 50% of 110, 55. And 20% of 110, 22. So that's why you're supposed to deal with the repair and maintenance. Then you go to heating and lighting. Heating and lighting is supposed to be distributed based on floor area, right? Floor area. So our floor area, as per the department, what is the floor area occupied by each department here? So if you look at that table given down there, the floor area is square meters. So we have TQ and M, 5,000 to 4,000 to 1,000. So let's do this. Eliminate the zeros because they have a common number of zeros. So that is 5 is to 4 is to 1. Any common divisor we don't have, right? So we'll be able to just pick it and bring it here. 5 is to 4 is to 1. How much are we distributing? We are distributing 90, right? So 90, T will be having 5 over the total. 5 plus 4 plus 1, that is 10. So 5 over 10 by 90. 4 over 10 by 90. And of course, M will be 1 over 10 multiplied by 90. The answers you are getting here is what you're supposed to leave and bring to this section here. So let's start with the first one. What are we getting for T? 45. How about Q? How about Q? 36. M, What will we have for M? 9. At the end of the day, if you add the amount that has been distributed, it should not be more than what you are sharing. Remember, you are sharing 90 million as rent tax or eating it, lighting. So it must be equivalent to what you are distributing to the 3 departments. The next one, we have consumable supplies. Consumable supplies here. Supplies. So consumable supplies is supposed to be distributed based on direct labor hours, right? So we have labor hours. The most interesting part of this particular question is that, remember, direct labor hours was used somewhere here. So we don't need to do another calculation for the ratio. Just leave 5:3:2. And this time around, we are using that ratio to distribute the total overheads for consumables, which is 30. So it means we are going to have T taking 5/10 by 30, Q 3/10 by 30, and M 2/10 multiplied by 30. What are we getting for the 3 departments? So let's start with T. When you take 5 divided by 10 by multiplied by 30, 5, you divide by 10, multiplied by 30. What are we getting? What are we getting there? So I'm told this one will give us 15. How about Q? 15, 9. And M, what will we have for M? 6, right? So we come and indicate 15, 9, 6. So that's a consumable as overhead item. And the last item there is general overheads. General overheads. So general overheads, we are told, should be 20% of direct wages cost of each department. So look at how the examiner is trying to twist this concept. They are telling us that general overheads, they don't have a specific amount which you are going to distribute. They don't have a specific amount, but they are telling us the general overheads will be allocated or distributed based on 20% of direct wages, 20% of direct wages, not direct labor hours, but it is based on direct what? Direct wages. So we need to get direct wages for each department. Then we take 20% of it to be the general overhead. So do we have total wages? Do we have total wages for each department? Do we have wages? Are we given wages? Look at the allocation table, the production department, and then the basic. So we have direct labor hours, we have direct wages, cost given in millions. So T has got 150 million. And we are told you only need to take 20% of it. Q has got 210 million. And we need to take 20% of it. And of course, M has got 100 million. And we need to take 20% of it. So if that is taken, what will we have as the general expenses for each department here? So let's start with the T. 20% of 150. What will we have? 20% of 150. What will we have there? 20% of 150. 20% of 150. Let's see what is we're getting here. Okay, I'm told it is equal to 30. How about Q? 20% of 210. 20% of 210. $42. And then 20% of the last one, that is 20% of 100. 20% of 100. What are we getting? Is equal to 20. Is there any overhead that you're leaving out? 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 There is none, right? Good. So once that is done, please go ahead and give us the total overheads distributed to each department. Total overheads distributed to each department. Total overheads distributed to each department. So somebody should start with the T column. This column here, what are you getting as the total amount distributed to T departments? Somebody should be able to add that for us. Another person should pick column Q, then the other person should pick column M. So just indicate the letter and the total. The letter and the total. So I'm told T is equal to 830. How about Q? M547. Thank you. Somebody should give us Q. 562. 562. Good. So remember they said once you do Roman 1 of the question, you'll be able to get 6 marks. And this is where you are going to get the 6 marks from. So this is the first one, second one, third one, fourth one, fifth one, and of course, the 6th one. We don't mark totals. This one here will not add any value. This one will not add any value. Just look at the entries. In management accounting, we also have entry. For every correct entry, give 1 mark. Every correct entry, give 1 mark. It also applies in this particular unit. So are we together up to that point? Are we together up to that point? Are we together? Are we together? Have you understood something? Have you understood something? If you are told to account for your 47 minutes, will you be able to appreciate? Will you be able to confirm that you've actually spent your 47 minutes effectively, as if we are ending the session at this particular point? Will you confirm that you've actually gained something within the 47 minutes? Are you better than the way you joined the meeting? Great. So we've agreed on 3 things. We've agreed on 3 things. We have agreed on 3 things. Number 1, if you've not joined the classes, please do it now because we've already started and we are not coming back. But if you join us today, you'll be able to access all these materials. We've also agreed that once you join the class, for you to do this paper in first attempt and forget about it, ensure you have revision kit from RCM. Whether in soft copy or in hard copy, ensure that you get yourself a copy of this revision kit. Remember, it is updated up to December 2023. The April sitting will be able to get the solution in class. As you can see, we've already provided solution for this particular question from April sitting. So the April sitting, all of them will be done in class. All of this will be done in, all of this April sitting will be done in class. December, going backwards, is already presented in this particular book. So just make the right decision by reaching out to these people. Our pay bill to join the classes, 62 42 839. That is our pay bill. Account, we are talking about management accounting. And now, for clarification purposes, remember RCM is not teaching only management accounting. We have all the CPA, we have all the CPA units, we have all the CFA units, and of course we have this big elephant in the room, business data analytics. So please invite your friends to join any of the classes at different levels for CPA, for CFA, and also for business data analytics. So that is it. For us to complete this, we'll have now to get into class and remain there to be able to handle part 2 of the question. So that is it. Thanks for your time. Enjoy your evening. And those who have decided to join the classes, let's meet on Tuesday at 6 p.m.